and the outlook going ahead. But time now to shift gears from finance and NBFCs to real estate now. We have joining us Mr. Amit Kumar Sinha, the MD and CEO of Mahindra Lifespace Developers. And Mr. Sinha, hi, morning. Thanks for your time, and you've had a very good quarter gone by. Your residential pre-sales have come in at 752 crores, which is a very solid uptick on a year-on-year basis. If you could help us understand some key factors driving this growth, what has gone right this time around, and is this pre-sales number that we've seen sustainable for the remaining 2 quarters of FY26 too?
Thanks for having me. Yeah, good results for us, so thank you. I think pre-sales have very lumpy, as you know, in this business. They are dependent on approvals. So this quarter turned out to be a good one because we were not only looking for approval, but we also had a good bunch of sustenance. So a lot of launches that we did in the previous year that gave a lot of momentum to us. So this kind of result should be sustainable for us. In fact, in the following quarter, we're looking for a few more launches. Actually, 3 or 4 launches are coming up in the H2 part of this financial year, and that will also help the next financial year. We're hoping that this kind of results sustain with the sustenance sales that we have, sustenance launches that we have done in the past, as well as new launches. Overall, as you know, our business has transformed in the last 2 years. We have acquired roughly close to 46,000 crore of GDV across Mumbai, Pune, and Bengalore. And that is the foundation on which we are building our business. And you'll see a lot more exciting launches, good set of numbers on the pre-sale side, as well as collections and free cash flow. So that is the health of the company is improving, and we'll see a lot more good news coming out.
Amit, you plan to launch quite a few projects Hope Farm, Mahalakshmi, Bhandup, Citadel, etc. Share the aggregate GDV expected from these launches, and how much could it really sort of potentially be recognized within FY26 itself?
Yeah, so the total launches for this financial year, GDV-wise, will be close to 7,000 crore. Some part that you've already seen in the first half. And then, we stagger it. We don't launch all the inventory. While the project gets launched, we have inventory launched in phases to make sure that we get the volume right, the demand right, as well as the pricing right. But to answer your question in a short way, it says that 7,000 crore of GDV is going to be launched this financial year. And this is, as you said, very exciting set of launches. And it's something that we worked really hard. And these are a shift away from our affordable segment that we used to play. These are more or less premium, not even mid-premium. They're very high quality locations. We have designed the clubhouses, the facade, the layouts. We are giving a lot to the customers so they feel good about owning a home. We also launched a campaign called Home of Positive Energy, Hope, and that hopefully will capture the sentiments of what customers are looking from a dream home from Mahindra.
So that's the take coming in, but let's talk about your IC and IC business. I see select geographies like Jaipur, they've done well for IC and IC, Jaipur and Chennai. What's the outlook on this front? Any revenue that you're targeting over here, and other geographies, how are they picking up?
Yeah, so the primary geographies for us is Jaipur and Chennai. Typically, we give a guidance of 400 to 500 crore from our IC business, because that's the kind of volume that we typically see. Almost 220 has already happened in the first half. Our hope is that we'll meet our guidance that we have given for the IC business. Both locations are quite attractive. Chennai continues to be an area where we have lots of global clients coming up. Sumitomo is a partner with us, and Japanese Corridor has given us a lot of business. And we are waiting for approval for the OC2A. We had done a extension of our partnership with Sumitomo almost to the day in last year, November. That is likely to get final approval. That will open up more revenues for our Chennai Origins Industrial Park. On Jaipur, it's a very large opportunity for us. We continue to get a lot of demand both in DTA and SEZ side, and we'll continue to be ready for more opportunities coming our way on the Jaipur side. So it's an exciting business, but it has got 400 to 500 crore kind of outlook.
And that's a good going ahead, but while we're talking about some forward-looking guidance, if you could help us understand your revenue target of 4,500 to 5,000 crores by FY27. Are you still on track for that? What is driving the confidence? If you could just give us a number over there.
Yeah, so I think for next financial year, I think the pre-sales plus revenues as we combine, yes, the guidance we have given is 4,500 to 5,000 crore. I think given the previous question on launches, I think we have a lot of launches which are coming up in this financial year. And then a number of launches are going to be coming up for us in the next financial year. So I think from a pipeline perspective, we are very well set up. In fact, now we are adding more people on the design side, on the construction side to make sure that we are ready from an execution point of view. I think launching is one part, but I think a big part of my focus is to make sure that we are also executing those projects really well so that it translates into free cash flow as well as profitability for the company. So all that is in motion. You'll see a lot of exciting news, but we are looking good for our guidance of 4,500 to 5,000 crore next financial year.
So that sounds good, and you're on track to achieve that. But Amit, help us understand, when I'm taking a look at your launches figure in terms of your square feet, that has gone down in terms of a quarter-on-quarter, so sequential cut also, and a year-on-year drop. Are there any regulatory hurdles that you're seeing, or what is the reason why your launches have taken a little bit of a tapering?
Yeah, so two reasons. One is on the square foot, it used to be a lot more affordable. So now the affordable is gone. So from a realization perspective, it will be more. But in terms of square footage, it will take a dip till it starts to come back up. And on the regulatory approval side, I think you know the EC issue that plagued the whole of Mumbai. And that affected the speed at which the approvals were coming through. Now with the EC issue resolved, I think we are in the queue to get our approvals. So all of our projects, at least 3 of the 4 projects later this year, we are waiting for EC approvals, and they are looking good for us to get through. And a good thing has happened now. RERA requires us to have an EC in before. So while you used to have launch and then wait for EC to start the construction, from a customer point of view, it's much better because even though RERA may get delayed by a month or 2 months, but it's construction ready. So you can launch as well as start the construction. And you may have seen the announcement partnership with Tata Projects just last week. So we are trying to improve the premiumness of our project. We're also looking to work with large players like Tata Projects to make sure that we are fast tracking the execution on our side.
Okay, Amit, great having you on the show. Thanks for taking the time out and speaking with us today.
Thank you.